Good morning everyone and welcome back to my YouTube channel. So in today's video, we're going to discuss about something very important in trading, yet most of the traders don't really pay attention to it. Something that helps profitable traders to hold their trade for a longer time, all right? So this is the fundamental analysis. So in today's video, I'm going to show you in the first place the importance of fundamental analysis, and secondly, I'm going to show you how and where can you make your fundamental analysis, and lastly, how does the fundamental analysis affect the market. So today's video will be filled with valuable information that will definitely change the way that you look at the chart and make your analysis and take your trades. So make sure to stay with us until the end of this video so that you understand properly the concept. So without wasting any more time, let's get started. So what exactly is fundamental analysis and why does this really matters for traders? Well, unlike the technical analysis that only focus on marking levels and structure on the chart and taking trade based only on this chart, your fundamental analysis focus on a different aspect of the market like the economy performance, the central bank monetary policy, the inflation, the geopolitical situation around the world. And all these aspects affect tremendously the related currency over a longer period of time. And knowing how does this aspect affect the market or the related currency will help you to catch longer moves in the first place, and secondly will help you to hold confidently your trade until the market hits your take profit. So basically, the fundamental analysis gives you the direction of the market, and the technical analysis gives you your entry and exit points. So when you master both of fundamental and technical analysis, you trade with logic and not emotions. You trade confidently, you know the direction of the market, and then you hold your trade confidently until the market hits your take profit, and you don't enter your trade based on FOMO or your emotions, all right? Now you may be probably wondering where can we get all of this information, because when you're making your technical analysis, it is pretty simple. You just open up your chart, you mark your levels and structures and take your trade. But the fundamental analysis is a little bit different and a little bit difficult. Where can you get all of this information related to economic performance and inflation, for example, or the monetary policy of a given currency? Well, this is where FastBull comes to play. So this is the platform I've been using to make my fundamental analysis, and this platform is absolutely amazing. It provides you with all the economic details and news you need to know about a given currency before taking your trade. Not only that, FastBull has recently updated their platform by adding very interesting features like this built-in chart here, which help you to have a direct view over the currency that you're making a fundamental analysis on it. So this one here is their default template. You can also change your template. This is my own template here, and then you can have a direct view over the currency you are analyzing here. And this one here below here, you have still your fundamental news that you can read and see how it actually affects the market here. This built-in chart is really simple to use. It has multiple interesting features like this multiple view here, multiple windows. You can have multiple view over many other pairs at the same time. Okay, so most importantly, all of these features are completely for free. You can use them for free and forever. Okay, so you can find all the necessary links in the description box below. FastBull is available in website and the application version as well, so you can find all the necessary and all the useful links in the description box below. Go ahead and give it a try. Now let's try to answer to the real question, which is how can we use fundamental analysis to determine the direction of the market? Well, it depends on the aspect of the fundamental that you are focusing on. As we have talked about earlier in this video, there are many aspects that you can focus on when you're making your fundamental analysis, like central bank's monetary policy, inflation, the geopolitical tension around the world, and there are so many other aspects that you can focus on. And I cannot cover all of them today in a single video. So in today's video, we're going only to focus on central bank's monetary policies, which is the only thing that affects the most a given currency. All right. So there are many central banks in the world, and the most known and most powerful of the central banks is the Federal Reserve Bank of the United States, or known commonly as the Fed. All right, so this one here is the Central Bank of the United States. And there's also the ECB, which is for the Eurozone. We also have the Bank of England for the British pound. We have the Bank of Japan for the Japanese yen, the Bank of Canada. We have the Reserve Bank of Australia. We have the Swiss National Bank, and we have also the Reserve Bank of New Zealand. All right, so all of these central banks control their related currency, and their monetary policy affect tremendously the value of their related currency. So how does the banks control the value of their related currency? Well, they control it through what we call a monetary policy. So what is a monetary policy? Well, a monetary policy is when the central banks take decisions that gives value to a given currency, or reduce the value of this given currency. All right, for example, we're going to use the example of the Fed, which is the most powerful central bank in the world. Let's say the dollar is hit by the inflation, and now the central banks want to give a little more value to the US dollar. So what the Federal Bank of the United States will do is to just increase the interest rate. Okay, this way the US dollar will gain some value against the inflation. So it will help the government to control the inflation and bring it down. All right, and inversely, when a central bank decrease their interest rate, that means this related currency is going to lose their value. Okay, so this is in a very simple way how does the monetary policy actually work. It is actually more complex than that, but I'm just giving you just an overview about it. Okay, so to sum up, when you're hearing a central bank, let's say you are trading Euro USD, for example, and you're hearing that the Bank of the United States or the Bank of the Central Bank of Europe wants to increase rate or decrease rate, you have to trade accordingly. Let's say that the United States is willing to increase, to hike the interest rate. That means that the US dollar will gain more value, and the Euro USD will start dropping because the value of the dollar is increasing. All right, so you have to trade accordingly. Okay, and in the other hand, if the European Central Bank says, for example, it's going to cut their rates, their interest rates, that means that the euro, the value of the euro will let it be decreased because the European Central Bank is about to cut rates. That means that you have to sell on Euro USD, not buy. All right. So this small information, these small tips will definitely help you to determine a longer term direction of the given trade, of the given period that you want to trade. Okay, I will give you another real example. So this is actually a trade that we have taken with my community, my smart premium community, back in July. So this one here is related to the Bank of Japan. On that day, when I made my fundamental analysis, I noticed that the Bank of Japan will increase their interest rate. Okay, that means that the yen will become a little bit stronger. Okay, so in this case, you have to buy the Japanese yen. Okay, when you're buying the Japanese yen, it means that, for example, in this pair pound Japanese yen, you have to sell it. Okay, because you're buying Japanese yen. Okay, I know it's a little bit confusing, but just listen to it a couple more time and you can properly understand it. So in this case, you have to sell, for example, euro Japanese yen, or USD Japanese yen, or the pound Japanese yen. And actually, we have called this trade on the pound and Japanese yen based on this fundamental analysis, because I know that based on my fundamental analysis, the Bank of Japan will increase the interest rate. Okay, that will cause the pound GPY to drop. Okay, so we have now used this technical analysis here to find our entry point. So this is our entry point. We have this structure here, which is completely bearish here. The market has taken this inducement, and after that, the market has hit on this smart money trap. This is a fake order block. It's not a real order block. The market has given a small reaction to the downside to trap a little bit of traders before pushing higher again and to mitigate our actual order block, which is high above here. And after that, market has dropped sharply over the interest rate hike of the Bank of Japan. And we have got this beautiful trade, and one of the member of our premium community has even made a risk reward ratio of 37, which is really amazing. Okay, so this is how the monetary policy can help you, or the fundamental analysis can help you to have to determine the direction of the market, okay, and help you to trade confidently and hold the trade until the market hit your take profit. All right, so this is just a small example here. In the next video, I will cover another aspect of fundamental analysis like inflation and NFP, or I don't know, it will be up to you guys. I will make maybe a poll in the group. So what topic do you want me to talk about in the next video for the fundamental analysis? Then I'll be more than glad to make another video about it for you. So thank you for watching till the end. This is it. This is just a small video for introduction. So next time we'll discuss more about another aspect of the fundamental analysis. So thank you for tuning in, and see you next time.